Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Today we're diving into another pivotal day for Bitcoin. With massive ETF inflows continuing to drive demand, the big question is, can the bulls keep this momentum going? After a record of $1.38 billion in inflows on November 7th, another $293.4 million poured in yesterday, on November 8th, with BlackRock leading the way. But after this relentless up-only run, could we finally be due for a cooldown? Let's break down these market moves, the technical signals, and what the latest political shift could mean for Bitcoin's future. On November 7th, Bitcoin ETFs saw an all-time high in daily inflows, totaling $1.38 billion. BlackRock alone accounted for over $1.1 billion, sending a clear message that the big players are diving in with confidence. Then yesterday, another $293.4 million flowed into Bitcoin ETFs, with BlackRock contributing $206.1 million. The iShares Bitcoin ETF iBit now surpassed the iShares Gold ETF, and that only within 10 months after the launch. The Gold ETF was launched 19 years ago. The steady surge from the world's largest financial players signals that Bitcoin is evolving from speculative asset to a cornerstone of strategic, long-term investing. Institutional inflows at this scale mean Bitcoin is increasingly recognized as a legitimate asset by even the most traditional finance giants. For retail investors, this is huge. It's a signal that Bitcoin is not just an alternative investment, it's becoming part of the mainstream financial landscape. In the short term, Bitcoin's market has responded by hitting highs that we haven't seen in years. From a low of $66,800 on November 5th, Bitcoin rallied all the way to $77,200 yesterday. While this is exciting for the bulls, there are signs that we could be seeing a pause in the near term, a breather that could actually set the stage for a stronger rally ahead. When it comes to price action, I tend to side with the bulls. But let's be real here. We've been in an up-only mode since November 5th, and some technical indicators suggest a brief cooldown might be in order. Right now, we're seeing bearish divergences on the wave trend indicator across multiple timeframes, which often signals a potential pullback. After hitting $77,200, a small dip to around $75,000 would reset momentum while allowing for a healthy setup, tapping into the liquidity at that level. Even in historical bull runs, there are days with dips as large as 30% or more. For context, I've been a Bitcoin permabull since 2017, dreaming of Bitcoin reaching the multi-million-dollar mark, just as Hal Finney imagined back in 2010. Although a 30% drop to around $53,000 seems far-fetched in this current market, even a 4% pullback to $74,000 at the upper boundary of our yellow channel could give the market some breathing room to rally into the $80,000 range and beyond. Now, adding fuel to this momentum, let's talk about the recent election, where the pro-Bitcoin candidate came out on top. With his inauguration set for January, investors are speculating on a more favorable stance toward cryptocurrency and Bitcoin. This win could mean a more supportive environment for crypto regulations, with fewer hurdles to institutional involvement. BlackRock's active engagement in Bitcoin ETFs is especially telling. When the world's largest asset manager is setting records in Bitcoin inflows, others take notice. This political backdrop is likely to amplify investment in Bitcoin and accelerate its path to mainstream adoption. On social media, sentiment is buzzing, with many predicting that Bitcoin could soon reach the $100,000 mark. Although social media excitement is high, it's essential to stay balanced and look beyond the hype. So what does all of this mean for you? We're at a historic moment as large-scale investments flow into Bitcoin, with ETF inflows setting new records. The technicals may suggest a short-term cooldown, but this only positions us for a potential rally. Whether you're holding for the long haul or trading the ups and downs, these are pivotal moments in Bitcoin's journey. Thanks for tuning in. Be sure to like and subscribe for more insights, and don't forget to join our Discord community to stay updated and discuss strategies with like-minded traders. And see you in the next one.